Oh, baby. You thought Elon was the only one hiding a big old rocket in his company? You know what? Macy's been hiding a rocket too. You never thought about it because no one shopped the stores, you'd think, in the last 18 years. But guess what? A rocket has exploded out of Macy's. Don't take any of this out of context. Nothing's weird about that. But look at this bad boy, up 22%. Good golly. What a day for Macy's. Obviously, they report earnings in the morning, so we're going to go over those. Heck, if you look back, I mean, it's crazy to think about it. This is one that nearly got killed last year. But you look year to date, the performance has been incredible, up 100%. Last year, up 238%. We're talking about a 52-week low of $5 on this stock. $5.57. We thought this stock was dead. And, I mean, if you look over the last 5 years, let's be clear with each other, it's still down 45%. But this boost here from the dip in 2020, if you were here for a 358% rise, look, you've made a good investment. Now, if you've been invested since here, then, you're down big money. But, look, that is just today's cementing a great year so far for Macy's. Let's take a look at this stock, see what we got rolling with it. Whoa. That's what we call a smasher, ladies and gentlemen. Non-GAAP EPS of $1.29 beats by $1.11, and a GAAP EPS of $1.08 beats by 94 cents. This company has mashed nearly 10 times the amount of, actually a little over 10 times the amount of profitability they were expected from the analysts, which is why analysts are bums. They don't have a clue what they're talking about. But great quarter for Macy's in terms of that. And then you look at the revenue line, $5.65 billion, up 58% year over year. It's a beat by $650 million. Macy's doesn't do these kind of beats. They don't do it. This is wild. Comp sales at 61.2% compared to a consensus of only a rise of 42.9%. You just don't see these numbers. That is what I call crazy. And then they've also raised the guidance. So they've raised the 2021 guidance outlook. Now expect net sales of 23.5 to 23.9 billion versus a consensus of 22.21. Massive bump there, over $1 billion increase. We're talking $1.5 billion increase in the guidance there. That was consensus too, and prior guidance was 2.17 to or 21.7 to 22.2. So I mean, great stuff. Which was raised from. I mean, look at this. I mean, they're just continuing to raise it. It's crazy to see that. EPS expected to be $3.41 compared to $3.75 versus a consensus of $2.17 only. Massive bump there. And prior outlook was $1.71 to $2.12. That is freaking crazy. So somehow the original guidance here was 40 cents to 90 cents, and now they've bumped it to $3.40 to $3.75. How is that possible? How does someone do that? That's crazy. I'm proud of them. I'm very proud of them. On top of that, what else could go right for them? They've announced the dividend's back, baby. They obviously got rid of the dividend a hot minute back ago. They've reinstated it at 15 cents a share, which is a yield of 3.2%. Well, let's be clear now, it's closer to 2% after today's bump, probably 1.8 or something, but that's okay. They've reinstated the dividend and authorized a $500 million share repurchase program. What else could go right for Macy's, Someone hit back on all my stuff, but that's okay. We'll go right back here. I'm telling you, someone hit the back arrow on all my stuff I had here. But we got the press release. We're going to look at it, see what they have to say to us. I don't know. This is bringing shareholders back, though. That's the thing. A lot of people fled this stock because of the fact you got rid of the dividend. Revenue's declining every single year. It was just a bad look for them. And then here we go with some recovery. There's good news, and this is what's bringing shareholders back in. Raised guidance. I mean, it's crazy to see. We saw most of the nonsense here, but quarterly dividends back. That's fantastic. $500 million repurchase. I mean, that's just crazy stuff. As far as second quarter highlights, we saw pretty well everything they were doing there. They posted a negative 81-cent line. If you were curious in the year prior, which is crazy, comp sales up 61.2. Wow. And then compared to 2019, this is where you see the really good data for them. Right, this is a company that was showing no growth at all, yet even compared to a 2019 basis, it's actually comp sales were up 5.8%. They haven't seen that. I think that's just a testament to how strong retail is right now. Overall sales still doing great numbers, to where even Macy's looks like it's doing pretty good. Now again, that's a tiny, tiny growth rate compared to a majority of other retailers out there. Let's be clear with each other. But still, on a 2-year basis, rising is good for them over their past, several year history. That is nice. It's very nice. So, macroeconomic trends shift to normal. The company saw strength across all merchandise categories. There you go. Good for them. Digital sales. Digital sales declined 6% versus the 2020 quarter, which, again, that's an issue for a lot of these companies where they saw in this quarter where sales typically in this region grew 100+% during this second quarter of 2020. Here they find the tough comp there, where most of them are doing single-digit growth and Macy's declines. That's not what you want to see. This business, unfortunately, as a standard retailer, you need to keep the growth in digital, which they kind of failed to do there. I don't know. It grew 45% versus the second quarter of 2019. So that's good, though, all things considered, to see that growth. So that's really where the majority of the revenue growth comes from in terms of comp sales. So that's good to see. Digital penetration was 32% of net sales, which is a 22 percentage point decline. Of course, that's because people weren't allowed in stores in most cases, but 32% is good for them because they need it. They need that number. They really do. They really do. So they brought approximately 5 million new customers into the Macy's brand. Interesting. I don't know necessarily. I know they have the data for that, but it's an interesting thing to say. In my perspective, I don't know. Less inventory than the second quarter of 2019 too, which is actually not that bad of a thing for them, all things considered. But obviously, could stem to a little bit of issues for them. So that's Macy's info there. We will look at obviously the balance sheet, something we like to do. The net income line is something I definitely want to do. Look here, obviously this is going to be the quarter ending. If you compare the years, net. The thing about me is sometimes you find things and then you lose them. There it is. The net income line. Again, look at this nonsense. This is a 6 months comparison here. Does it disappear whenever you scroll down? It really does, doesn't it? There it is, net income line. Found it. Look, from a 6 month standpoint, last year they lost $4 billion in this time period. Now they've gained $448 million. Great for them, all things considered. Let's look at the balance sheet, okay? We're looking year over year because there should be significant difference here, most likely. So July of this year, let's see. Total current assets right now sitting at $7.6 billion compared to $5.6 billion. Big growth there in the both the merchandise inventory category and the cash and cash equivalents. Total assets in general at 18.4 compared to 17.6. There's some growth there. Ideally, liabilities not going bonkers, but current liabilities did grow. They're at 6.7 compared to 4.8 billion. Stockholder equity did see an increase year over year, though that's what matters. 3.1 billion compared to 2.3. Not the best balance sheet out there, but for a company like Macy's, I take that as a win as long as you have stockholder equity in that standpoint, where you have more assets than you do in terms of liabilities. So I'll take that as a win for them. Crazy to see this out of Macy's. You would never expect it. I don't know. I don't know what to think about that. So just put into consideration this year in terms of sales, you'll be expecting, if they get that number accurate, $22 to $23 billion in sales. Now, this stock is, prior to today, was only trading at a $6.8 billion market cap. So definitely a great reason why you see such a massive bump here. But we'll be trading closer to $10 billion after today, most likely, probably higher than that. So it'll definitely return that valuation. And again, PE ratio not quite there yet because we need full year profitability to actually get that. But look, I'm going to tell you right now, I'm still not going to touch this stock with a 10-foot pole. I don't believe in the business model long term because I think digital's not there for them. There's a reason why this stock got devalued the way it did, even prior to the pandemic, right? If you look 5 years out, there's a reason why prior to 2020, it was still declining massively, already down 50+%. We're talking about during those levels, it was down 60% prior to even 2020. So there's a reason for that. People were fleeing the stock. For that reason, I think fair value kind of lies where it's at right now. If you're talking about very, very slight revenue growth for a company like this, they're going to be doing $20 billion every year. I'm not much into that, right? They make a case if they can obviously boost the dividend beyond the 15-cent line. We'll see what that looks like for them, but not a stock I'm definitely interested in holding by all means, but great movement today if you're in Macys. So that's what I got for you.